top property investment mistakes that you want to avoid when you're going out there and you're purchasing property. One of the biggest mistakes I see, if you're holding a property, it's going to cost you money. That is the reality of it. Things are going to go wrong. The fence is going to fall over. The aircon unit's going to shit itself. Hot water system's going to blow up. You're dealing with tenants and they're going to cause damage. Don't let that be a reason for you to sell a property in the short term. So many people think that they're going to wait for rates to go down, or they're going to wait for this perfect day where there's unicorns flying across the sky and to purchase property. The reality is that property prices are on discount. Do you want to deal with some things whilst holding property, but it allows you to retire earlier? Or do you go, nah, this is too much. This is too much effort. It's costing me $2,000 a year. I'm going to sell this property right now, but I'll just go out there and I'll keep working for the next 40 years. We are back with another episode of the Tailored Property Wealth Podcast. My name is Casey Taylor. I'm the host of the podcast. And in today's episode, we're talking about the top property investment mistakes that you want to avoid when you're going out there and you're purchasing property. That's going to set you up for success, obviously, if you can avoid these mistakes. And these are common things that people make. I've managed to build a multi-million-dollar property portfolio in just a few short years, and I want to inspire and motivate other Australians that if I can do it, so can you. The Tailored Property Wealth Podcast has been created to help educate, mentor, coach, and support you through everything relating to property investing to make sure you go out there and make a much better educated decision when investing in property. Please like, share, subscribe, and share this podcast with anyone who you think might see value in it. All right, so we'll get straight into it today. I hope everyone's out there smashing their goals, investing in property, saving money, whatever it looks like, or just simply going out there and learning more info. So straight off the bat, one of the biggest mistakes I see, and I think this one is the most crucial actually of all, and it's simply not purchasing property when they could have and taking that action, right? So many people think that they're going to wait for rates to go down, or they're going to wait for this perfect day where there's unicorns flying across the sky and all this stuff to purchase property. The reality is that property prices are on discount to what they'll be in 12, 24, 36 months, whatever it is. Go out there and purchase if you can now. Find a solution to make that work, because you're going to reap the rewards of that in 10, 15, 20, 30 years time. All right. I see it a lot when I'm talking to people, and I just featured on another episode with Mike Mortlock at Geared for Growth, and we were talking about people's mindsets. There's people I speak to that are finding every reason not to purchase, and then there's other people that are finding every reason to purchase. And it really comes back to that mindset. And that's another factor that people make mistake with, is they don't have the mindset for investing. You have to go out there and you have to make sure that you're looking at the positives as to why you need to invest in property. Property has increased and continues to grow in value. So get in as soon as possible, because you're going to reap the rewards. You're going to pay less for the property. You're going to borrow less for the property, and you're going to get more capital growth the sooner that you get in. Moving on to that next one, which is the impenetrable mindset. There's going to be mainstream media, no matter what, talking about how you shouldn't purchase property and X, Y, and Z. I think that there's a great example of this. 2018, you can still go out there and find the article and the YouTube videos on this. I looked at it on Friday. 60 Minutes did I think it was Bricks and Slaughter is what they named it, on how prices were going to drop 40%. 2018. Now, we're still waiting for that to happen. And it's been this same narrative for decades and decades and decades. Property prices going to crash 20, 30, 40%. The reality is, in Australia, that has not happened. Yes, it's natural for markets to correct 10 to 15% after they do go on runs. So you as an investor have to put that into your risk profile and understand that that's going to happen. But when that happens and your property drops in value 10 to 15%, you have to understand that's a natural part of the cycle. it doesn't just always go in this linear line upwards, because that is not what happens. You have to understand that prices will correct at points in the cycle, and that's why we diversify into many different marketplaces. You also, it leads into another point, which is taking advice from your family and friends. When I first started out, people were telling me not to purchase that property, or not to purchase now, or not to start the business, or not to do this or do that. If you have a goal and you understand what you want to achieve, sometimes the reality is that you need to block people out that might be looking out for your best interest, but they're projecting a fear onto you and a lack of understanding. And if you can go out there and absorb the information in a certain field or a certain area, that's where you know long-term that you're going to get the results that you're after. So that impenetrable mindset, you have to block out mainstream media. You have to understand that there's going to be shit that happens. Price is correct, for example. And you need to block out family and friends from periods of time, because that can influence the results that you get if you don't take action. I've seen clients in the past or prospects who talk to their dad. Oh, I've got to talk to my dad about this. Their dad doesn't have any property apart from their owner-occupied property, and they take advice from their dad and they don't take action. And now 12, 24 months later, they could have made 20 to 30%. And that's because they've listened to family and friends, unfortunately. Cool. The next one is, it's kind of touches on not taking action, but it's not purchasing when you have a budget and you've got the finance. What we see with people from time to time is their ideal purchase price, let's call it $650, is what they want to purchase for, and it comes back that they can only afford to purchase at $550. Don't get disheartened by that. It's a matter of pivoting, finding solution in your budget, and still taking action. The property 2 years ago might have been a $450 property, and it's now a $650 property because of the performance. The quality of the property, the quality of the asset does not change, apart from there's metrics that allow it to continue to perform. So don't let your borrowing capacity come in lower be a detriment to you taking action. I made this mistake when I was first starting out many years ago. I actually spoke to a buyer's agent who specialized in a particular field. My borrowing power and budget didn't fit into him being able to help me purchase in that specific field. I could have pivoted and I could have purchased somewhere else that still performed in value within that budget, and I didn't. And I still went out and purchased 6 months later, but it was 6 months I could have got that capital growth and injected me into that next property sooner. So get your borrowing power, find a solution in that budget. And if you don't know how to do that, that is where you speak to a professional, because that's what they do day in and day out, and they'll be able to find that solution within your budget. Next one is buying brand new property. I bang on about this all the time. When I share this on socials, I get DMs all the time from property spruikers, sales agents, whatever you want to call it, attacking me as to why I'm lying or whatever else. The reality is, if you're purchasing a brand new property, it's typically going to, one, be saturated with stock and kill scarcity, or two, you're speaking to a sales agent working for the developer who's getting paid a massive commission to sell you that stock. Reality is, established properties in established areas is what performs long term. In a future episode, we will break down new property versus old property in a lot of depth, and it'll really showcase to you what performs better. Thank you for listening to this episode of the Tailored Property Wealth Podcast. I hope you're learning lots and getting lots of value out of this episode. If you want to discuss the opportunity of working with us here at Tailored Property Wealth, jump across to the website www.tailoredpropertywealth.com.au, complete the contact form, let us know that you're listening to the Tailored Property Wealth Podcast, and let's reach out, let's have a chat and see how we can help you execute on your property goals. Another one is buying in your own backyard. If you live in a super regional location, or you live in a Sydney, for example, where prices have gone mad in recent times, and there's affordability piece now, that doesn't mean that that's going to be an area that performs as strongly as purchasing somewhere else nationwide, finding a solution in that budget where it's prime for growth, and you get that performance. Another one is doing your due diligence on the individual property. So you have to go out there, you have to first find the city or region that you're going to target. But then once you're looking at individual properties, a lot of people just look online at realestate.com. They find a property, it looks good, but it's in an absolutely terrible location. And then that desirability long term is affected because they haven't done their due diligence. They're purchased on a main road, or they've purchased next to a train line, or whatever that looks like. You need to have a really in-depth due diligence process to make sure once you get down to that city or region that you're buying that quality property in that pocket of a suburb, because that is going to be those small 1%ers that allow you to get your property portfolio to perform above average long term. Another good one is taking advice from a mortgage broker. Mortgage broker is there to provide you with finance so you can go out and purchase the property. They're not there to give you guidance on what you should be purchasing. Super crucial. And a lot of the mortgage brokers are out there that are giving advice on property, probably don't even have any investment properties themselves or have built up a portfolio. So make sure that the professional you're talking to sticks to their lane and they're talking about their particular lane. Another one is not surrounding yourself with that team of specialists. And that kind of touches back on that point before, is finding a quality team of specialists, and really setting yourself up to have that team so you're not making mistakes in each of the given fields, because it's just going to make sure you get those results. And they're a lot stronger long term, right? Everyone wants to go out there and cut corners, take shortcuts, not pay for particular professionals. One of them, for example, is a buyer's agent. They don't want to spend that money to use a professional, but then it costs them because they get to one or two properties and they get stuck. And that's where people within the team could have helped them allow to keep purchasing. So if you want to take a shortcut and avoid a fee, what is that going to mean for the rest of your portfolio long term? Many people that take those shortcuts are probably making a lot of the mistakes that we're listing here today. So surrounding yourself with that team of specialists is super important. We've touched on that in a past episode. Another one is selling a property in the short term. Property investing isn't always sunshine and rainbows. Like I said, property prices are going to correct. There's going to be mainstream media out there telling you why now is the worst time to buy. Prices are going to tank, whatever else. But number 3 is property maintenance. If you're holding a property, it's going to cost you money. That is the reality of it. Things are going to go wrong. The fence is going to fall over. The aircon unit's going to shit itself. The hot water system's going to blow up. Or you're dealing with tenants and they're going to cause damage. Or you're going to have to put up with different bits and pieces from the tenant. They might go through a midlife crisis and they might do whatever they need to do and they stop paying rent or whatever it is. The reality is that is going to happen. Don't let that be a reason for you to sell a property in the short term. You have to choose your hard, right? At the end of the day, do you want to deal with some things whilst holding property, but it allows you to retire earlier? Or do you go, nah, this is too much. This is too much effort. It's costing me $2,000 a year or whatever it is. I'm going to sell this property right now, but I'll just go out there and I'll keep working for the next 40 years. That's absolutely not what I want to do. I understand that when I'm purchasing property, things are going to go wrong. There's going to be tenants that are a pain in the ass. There's going to be maintenance that comes up. That is the reality of being a property investor. If you can't fathom or you don't have the mindset for that, that's okay. But you're going to go out there and you're going to have to work for 40 years in a job that you potentially might not like. Okay. The reality is that you got to deal with tenants. You got to deal with maintenance. And over a 10, 15, 20-year period, you'll probably see some crazy things that you didn't think you would see. But the reality is that it's inevitable. These things are going to happen. So don't sell a property in the short term. The longer you can hold a property, the better. There's entry costs and there's exit costs when you're purchasing property. So you might make a short buck as well, and that's where people's discipline kind of comes into it. I've made $200,000 or $300,000 on this property. I want to cash this in. I'm going to go and sell this property. I'm going to get whatever it looks like after capital gains and all the rest, and then I've got all this money. That is a discipline issue, and you need to address that. Hold property long term. It's going to serve you much better, and it's just going to dramatically change your future than selling in the short term. All right? Get your mindset right so you can deal with the issues that are going to take place when you're purchasing property, and then you won't sell in the short term. All right? Another one is buying with emotion. Don't buy with emotion. Don't look at the sexy house that's next to the river and it's flood affected and think, no, the house is beautiful, but then a flood event occurs and the property's trashed or whatever it looks like. Or a common one is people get so emotionally invested, they pay an absurd amount of money for the property, they pay over market value, and the property's got to sit there for 6 to 12 months to continue to performing just to catch back up to where you actually paid for it. It costs you money, right? So make sure the decisions you're making are calculated. And sometimes you're going to go out there and purchase with emotion if it's your own occupied property or whatever that is. But sometimes getting that professional in your corner to pay them is actually going to save you money because they can keep you in check. They can set your expectations and really coach you through that just to make sure you're not making some of those mistakes and investing emotionally or purchasing emotionally. All right. That is some of the top property investment mistakes to avoid when purchasing. All right. Pretty short and sharp, and I've just pumped through them. But if you can reflect on these, right, and just go through and tick off, how can I make sure I'm not making each one of these mistakes? And what do I need to do to be able to work on myself as a property investor to make sure my mindset's right, to make sure I'm not getting influenced by people I don't want to get influenced by. I want to have my finance in a position where I can take action and mitigate my risk. So many different things that you can work on and reflect on this list of things to set yourself up for success, set yourself up for being a successful property investor, getting those results so that for you and your family in the future, you're able to reap those rewards. Thanks for listening, guys. Much appreciate everyone who is listening, enjoying the podcast. If there is an episode that or a subject that you want me to touch on, please let me know. Flick me a DM, send us an email, whatever it is, let us know and we can take a look at it and touch on that. Thank you for watching. Thank you for listening. Have a great day. Talk soon. Thank you for listening to this episode of the podcast. If you don't already, make sure you follow us across all of our social platforms. That can be Instagram, YouTube, LinkedIn, Facebook. I wish you all the best out there on your property investing journey, and I hope each decision you make in purchasing more property gets you closer to your goal of financial freedom.